Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Robinhood Markets Inc. Annual Report. Robinhood Markets Inc. offers a wide range of financial services and products through its platform. At the core of its offerings are investment services, which enable users to invest in stocks, exchange-traded funds (ETFs), and American depository receipts. The company's platform also provides advanced features such as fractional trading, recurring investments, margin investing, and short selling. In addition to these investment services, Robinhood offers various learning and education solutions to help its customers navigate the world of finance. These include Snacks, a digest of business news stories, Learn, an online collection of guides and tutorials, news feeds that provide access to premium news from reputable sources, In-app education, which covers investing fundamentals, and Crypto Learn and Earn, an educational module for cryptocurrency customers. The company also provides various banking services, including Robinhood credit cards, cash cards, spending accounts, and wallets. These services enable users to manage their finances more effectively and make transactions with ease. Overall, Robinhood's comprehensive suite of financial services makes it a one-stop shop for individuals looking to invest, learn, and manage their finances. The company's services can be summarized into the following categories: investment services, stocks, ETFs, American depository receipts, advanced trading features, fractional trading, recurring investments, margin investing, short selling, learning and education solutions, Snacks, Learn, news feeds, in-app education, Crypto Learn and Earn banking services, Robinhood credit cards, cash cards, spending accounts, wallets. The significant increase in Robinhood Markets, Inc. stock price over the past year can be attributed to several key developments and expansions that have taken place throughout 2025. One major factor was the company's diversification of offerings and customer growth, which led to a substantial rise in assets under custody, AUC, and an increase in funded customers. The expansion into the European Union with stock and ETF tokens also played a significant role in boosting the stock price. This move enabled crypto investors in the EU to access over 200 US stock and ETF tokens, leading to a roughly 12% jump in the stock price on a single day. Additionally, Robinhood's strong Q3 2025 earnings and analyst confidence further contributed to the surge in stock price. The company's third-quarter financial results exceeded expectations, with revenues surging by 100%, fueled by diversified earnings across cryptocurrencies, options, and net interest. The growth in prediction markets and entry into private banking services also had a positive impact on the stock price. Robinhood's rollout of banking services, designed to emulate luxury, private banking, further bolstered the rally as the company aimed to become a comprehensive financial services hub. Finally, the record full-year 2025 financial results and continued innovation solidified Robinhood's position in the market. The company reported annual revenue reaching $4.5 billion, a 52% increase year-over-year, and net income of $1.9 billion, a 35% increase. These developments have collectively contributed to the significant increase in Robinhood Markets, Inc. stock price over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for Robinhood, a fintech company, are multifaceted. One key driver is the increase in transaction-based revenues, particularly from options, cryptocurrencies, and equities trading. This growth can be attributed to the expansion of its user base and increased trading volumes. Another significant contributor to revenue growth is the rise in net interest revenues from margin loans, securities lending transactions, and revolving credit facilities. Additionally, the company's subscription fees from Robinhood Gold subscribers have also seen a notable increase. Furthermore, the growth in trade PMR performance obligations has contributed to the overall revenue expansion. However, not all factors are positive. The negative impact of litigation and regulatory investigations on revenue cannot be overstated. These issues can lead to significant financial losses for the company. Moreover, decreased trading volumes and increased competition may also hinder revenue growth. To mitigate these challenges, Robinhood is implementing various strategies, including increasing trading volumes and renegotiating interest rates with Barclays. The company is also exploring new revenue streams by purchasing credit card receivables and earning interest from customers. By diversifying its revenue sources and addressing the negative factors affecting its business, Robinhood aims to maintain its growth trajectory and overcome potential challenges. The net income of the company underwent a significant transformation between 2023 and 2025. In 2023, the company reported a net loss of $541 million, but this changed dramatically in 2024 when it recorded a net income of $1,411 million, marking an increase of $1,952 million from the previous year. This upward trend continued in 2025 with a net income of $1,883 million, representing a further increase of $472 million from 2024. However, despite this growth in net income, the profit margins experienced a decline between 2024 and 2025. The company's profit margin stood at 47.8% in 2024, but decreased to 42% in 2025. This decrease may be attributed to various factors, such as increased delinquencies and charge-offs due to higher interest rates, or changes in customer behavior in response to rising interest rates. The reasons behind the increase in net income in 2024 are multifaceted, likely resulting from a combination of increased revenue and reduced operating expenses. Conversely, the decrease in profit margins in 2025 suggests that the company may be facing challenges related to its financial performance, necessitating closer examination of its operations and strategies to mitigate these effects. The company's financial performance has shown a significant improvement in generating operating cash flow. In contrast to the negative operating cash flow of -$157 million in 2024, the company was able to turn things around and achieve a positive operating cash flow of $1,638 million in both 2024 and 2025. This indicates a substantial increase in the company's ability to generate cash from its core operations, which is a crucial indicator of financial health. The company's debt level has undergone significant changes over the past few years. Initially, the debt level increased from $7,000 in 2022 to $10,000 in 2023, before decreasing to $26,000 in 2025. However, a closer look at other data reveals that total liabilities increased from $18.2 billion in 2024 to $28.9 billion in 2025, indicating a substantial rise in debt level. Furthermore, the company's total financial liabilities decreased from no data provided for previous years to $2,530 million in 2024. The interest expenses have also changed significantly over time. Interest expenses related to credit facilities increased from $24 million in 2024 to $32 million in 2025. Additionally, the average interest rate on debt increased from 5.4% in 2022 to 9.1% in 2025. However, there is also evidence of a decrease in interest expenses, with a drop from $5 million in 2024 to $45 million in 2025. Overall, it appears that the company's debt level and interest expenses have undergone significant changes over the past few years. The performance of various regions and segments has been mixed, with some areas excelling while others struggled. Internationally, expansion efforts have faced significant challenges due to adapting to local regulatory requirements, customer preferences, and other location-specific factors. This has resulted in poor performance across several markets. In contrast, the Europe region has shown strong results, having obtained licenses to operate as crypto asset service providers under MiCA. This achievement is a significant milestone for the company's international expansion efforts. The US's T-1 region experienced a major disruption due to an internal system failure in Amazon Web Services, leading to poor performance. However, it is worth noting that this was an isolated incident and not representative of the overall performance of the region. Management's outlook on the company's strategy is one of growth and expansion. The company has disrupted the industry by offering commission-free stock trading with no account minimums, and it continues to diversify its services to build relationships with customers. This focus on customer satisfaction is reflected in their commitment to best execution for customers through routing orders to market makers with the best historical performance. Financially, the company expects significant growth, with net income projected to increase from a loss of $541 million in 2023 to profits of $1.4 billion in 2024, and $1.9 billion in 2025. The company also anticipates generating substantial net cash provided by operating activities of $1,638 million in 2025. Management is confident that the company's revenue streams will continue to grow, with transaction-based revenues expected to increase by 67% from 2023 to 2024 and 37% from 2024 to 2025. Net interest revenues are also projected to grow by 19% in 2024 and 36% in 2025. While the company faces some risks associated with pending litigation and uncertain tax positions, management believes that these will not have a material adverse effect on the business. Overall, the company's strategy appears to be focused on growth, customer satisfaction, and financial stability. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has purchased Trade PMR, WonderFi, PT Buana Capital Securitas, PT Petagang Asset Crypto, and Rothera in a joint venture with SIG. Additionally, it acquired Bitstamp, expanding its presence in the market. The company has also made divestitures to streamline its operations. It ceased support for cryptocurrencies on certain platforms due to regulatory issues, removed Robinhood stock tokens from specific jurisdictions, and wound down its spending account product by Q2 2026. These moves demonstrate the company's efforts to adapt to changing regulations and focus on core business areas. The company has a history of rewarding its shareholders through various means. One way they have done this is by paying out dividends, which demonstrates their commitment to sharing profits with investors. This practice not only benefits existing shareholders, but also sends a positive signal about the company's financial health and stability. In addition to paying dividends, the company has also taken steps to return value to its shareholders through share buybacks. By purchasing back shares from the market, they reduce the number of outstanding shares, which can lead to an increase in earnings per share and boost investor confidence. This strategic move not only benefits existing shareholders, but also aligns with their goal of maximizing shareholder value. That concludes the financial summary for Robinhood Markets Inc. Feel free to comment below, and I will be happy to answer them when possible.